Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about the moving average, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Coach's education platform. Enjoy guys.
I'll tell you the reason why I'm using the hull isn't anything technical. I was looking at different moving averages and I was thinking, okay, should I use a simple moving average, or should I use an exponential moving average, or should I use a weighted moving average? There's all these different moving averages. I don't think that there's any difference ultimately, whichever moving average method that you choose, it doesn't matter. I chose the Hull suite in particular in TradingView because it had this big wide ribbon that was very colorful and easy to see. I swear to God, that's why I chose it.
But they do say that it's probably the most accurate one because it gives you it's the one closer to the current value of any asset.
They say everybody has a good reason to use their moving average. One of my mentors, Perry Kaufman, has the Kaufman moving average, the weighted moving average. And that's supposed to be as a matter of fact, it's probably on this indicator list. I'm sure he has several things that are in here. Yeah, look at all these things that he has. The adaptive moving average. And he used to try to tell me that, hey, you should use the Gamma. And it didn't make any difference. It was the same as everything else. I love Perry. He put a lot of work into it, but it didn't give me any edge over any other. Sorry.
You only use it in our case, because I know people trade around that. I'm not trade around, but some people just use it to place different trades on different assets. But in our case, the only reason you use it is to determine that initial market bias or trend.
Yeah. So I'm using it to determine trend, right? So that I can tell whether I'm going to put on a put fly or call fly. The theory is that I'm not looking to be right every single day. I just want to be right enough in the direction of the trend to take advantage of the fact that the average move in the direction of the trend tends to be of a greater magnitude than the counter trend moves. That's the only reason why I do it. I can't tell on one day or another if it's going to go up or down. I just want to be in the direction of the trend. That's it. I don't even know that I have to look at the moving averages. In fact, my old method, does anybody remember my old method of doing the trend? What did I call it? I'm sure somebody out there knows. What was the old method that I used to determine trend?
Fuzzy eye.
That's right, the fuzzy eye method. So you know what I would do? I would squint my eyes until the chart got really fuzzy, and then wherever I perceived the trend going, that's what I did.
Okay.
And I'm telling you, it's just as effective.
One of the first things you said when I first heard about you was just take a 2-week average. What's a moving 2-week average was?
See, that all came about because people said, well, let's come up with something a little bit more quantitative, Ernie, so that we can have a little bit more confidence. And I said, okay, I've had conversations like this with analysts for the past 35 years, and everyone's wondering what constitutes a trend. And just in my experience, some people think after a week of market going in one direction, that's a trend. Some people think it's 2, some think it's 3 or 4, right? So I said, let's just split the difference, say it's between 2 and 3. So choose either a 14-day or a 21-day moving average. There you go, done.
So every morning, that's what I do. I do the 2 to 3 week before I look at your stuff and then compare what you've come up with, and it's always been the same.
Yeah, but you know what? I'm just telling you, I don't think it's any more accurate than my fuzzy eye method.
Got it.
Yeah, and people will ask me, what period are you using on that hull, and why are you using the hull? And I'm trying to explain to them that no real good reason, and period, I don't know, because it sounded good, right? Because what they don't know is that I've spent years and millions of dollars experimenting with all kinds of different variations and all kinds of sophisticated methods of determining trend and simple methods in every single type of average. I've worked with guys that have actually their name on the averages that you see in these friggin' indicator charts, and none of them make a difference, right? So when they ask me, I tell them the most arcane, inane, stupid sounding thing, and I'm telling them that it's just as effective. Yeah, the fuzzy eye method is just as effective. People don't believe that. They want something more scientific, right? But even my scientific thing, I got all these things to choose and none of them make a difference. So then it becomes like a swag, a scientific wild ass guess. So I got all these different choices. Which one am I going to use? I'm going to use one that says that's 2 weeks or 3 weeks. Okay, then I have different methods of doing it. I could choose the slope of the average, which way it's pointing, up or down, or I could use above or below the average. Do they give different results? Not really. They have different characteristics in the way they determine, but in the long run, they give you approximately the same result. Yeah, it doesn't matter. Really doesn't.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.